Hello guys, so welcome to the channel. So today we are going to be continuing with the smart money concept which we actually started with in the previous video, and today we are going to try to go much more in depth and to actually make you see the ins and out of it all. Alright, so as you guys already know, in the previous video we made mention of SMC, and we are going to try to go much more analytically into it and how we should wait for things, the setups we should wait for, those we should not wait for, and the different things we should have in mind before actually going for it. Alright, so with that being said, let's get straight right into it. So now to begin with, as we all know, right, the drawings which I'm going to be doing right here, it doesn't mean when you go to the charts you're going to find these drawings as smooth as this. All right, it's never going to be this smooth, but it gives you insight as to what you're waiting for before you take that particular move. All right, so now the whole goal with it is you want to always find the market actually having a trend, and when you have this trend you want some liquidity formation as such. Okay, and you want to find the market getting back into an origin that caused that structure to move, and then you have a break to the upside, right? This is what you want to wait for ideally. So in this part, in this structure, I'm just going to draw a little things here for us to see, so that when I get to the live chart we can be able to understand much more better, right? So now, whenever, as you can see here, whenever we had a break or structure to the upside as such, I'm going to call it the boss, for instance. We had a break or structure to the upside, and we had this uptrend. Okay, as I said, the strategy works with the trend. Always try to identify the trend. Okay, and whenever you saw that we had a break or structure, as I said in the previous video, always make sure that there's an origin. An origin is literally the from where the impulsive move started. Okay, before we had this break of structure, where did the market come from? It came from here. This will have an origin, so we are going to look for an order block here. An order block is simply the last candle, okay, before the impulsive move. Okay, we are going to talk more into that as well, and we need to equally find what a fair value gap available. So in regards to fair value gaps, when we talk of fair value gaps, you want to always find, let's assume you have candles as such. You have candles as such. Okay, you have three candle setups like this. Let's say we're in a bullish move and likes of that, and you had this kind of structures here. So now you have an upward trend. You have a fair value gap whenever you find that there's a gap as such. Okay, whenever you find three candles like this and the market didn't come back to mitigate this area, not even with wicks. Okay, this gap here, let me change the color of this so maybe we could see it clearly, maybe something as such like this. So whenever I have this kind of gap here, it makes us to understand that okay, the market makers didn't literally attack this zone back, so this is a fair value gap. So whenever you get me mentioning FBG, then you should be understanding that that's what I'm actually attributing everything to. So let's get back to it, and I'm going to designate this as the FBG, right? So I want to see the fair value gap present. Remember, I've not drawn the fair value gap. I'll show us how to identify that in some of the charts. I want to find what inducement. Okay, this is what we call inducement and likes of that. So it's very important for us to, I just call it liquidity. All right, so whenever the market is moving as such, most buyers, since we're in an uptrend, they want to see a double bottom from here and move up. But out of a sudden the market clears them out, gets to this kind of zone here, all right, that has a fair value gap and an order block before going their way. Okay, this is what market makers actually do. That's why the concept actually focuses a lot on the smart money concept. So that's what we have to have in mind, right? So these we have the liquidity might not form like this. This is a very, sometimes some setups can show you liquidity form like this. All right, in some other cases, let's say when we are in an uptrend, for instance, like that, the market will have a break of structure here. The market might form a trend line liquidity. It might form something like this before breaking everything to come to our order block somewhere around here before going back our direction. So this they call this a trend line liquidity from here to here as such. This is literally a trend line liquidity like that. All right, form that. The reverse is true as well. As you guys can already see, we had a break of structure here and likes of that. We had that break of structure, and yeah, that's it. And whenever you get your positions like that, you want to always make sure your entry is from this zone, all right, to the top, and your TP is always below the fair value gap. So we're going to be seeing this practically and when to engage with them, right, and how to view them from practical charts, right. So it's very important that we take note of all this that I'm mentioning right here. So it's very important you have this in your head before you get to continue along. As I said, we have a set of confluences that we always want to find that are being met before we get to engage in anything like that. So keynotes, for instance, we want to find a trend. We need to always ensure that there's a trend, okay? We need to make sure there's an origin, all right? We need to make sure liquidity is available, and we need to equally, in case let's say the market is about to change direction, or maybe you think maybe the market is about to move from an uptrend to a downtrend, I'll show you guys how to identify a change of character as I did in the previous video. And we're equally going to see a break of structure, all right? A break of structure either to the upside, consistent break of structure to the upside to make us understand that, okay, we are in a bullish trend, okay, and the consistent break of structures to the downside to make us understand that we are in a bearish trend. That's what we have to understand. And OB is the order block, all right, and the order block simply means the last candle before the impulsive move. We are going to be seeing that the fair value gap, right, that zone between three candles where the market didn't actually get to it, and there's space available there clearly for us to see. So before going into the charts for us to see some of the structures that the market has been producing, I just want to talk a little bit about the change of character. So when we get to the chart, we can try to identify all those. So whenever we have a trend as such, all right, markets keeps breaking structures like this. It might not be all this smooth and likes of that, and out of a sudden, this break of structure here, instead for the market to form probably a new level around this zone, we literally break this last origin before. So the change of character, whenever the market breaks an origin, okay, the last break of structure to the upside, this origin, when it's mitigated like this, I know very well that the market is about to start shifting structures. So my order block is going to be somewhere around this zone, waiting to swing downwards, and they will have a change of direction, okay, change of character. So a change of character, if I'm to help you see it clearly, this was the last origin here. This is where a change of character occurred, and this is where we equally had the break of structure. This is the last break of structure to the upside, and the market broke it here. So whenever I find this and I can observe it clearly, then I start understanding that, okay, I should literally be waiting for an order block from this zone. Of course, you try to find a fair value gap there. If you don't find the confluence, you can always allow it. It's not everything you go for. And then now we keep having our break of structures to the downside. We'll have a break of structure there, and we keep having orders to the downside. Normally it's all smooth as such, but when we get to the chart, it's not going to be this smooth. I'm just doing this so you have the concept in your mind. So when we get to the chart, it becomes much more easier. So this is when the change of character occurs. That means a market shift, okay? That means we are shifting from an uptrend to a downtrend. So this is what we understand that all this is happening. So with all that being said, let's try to see some charts and understand. And we need to understand that this, most of the times, the market actually might not come to the order block, but it might come to the fair value gap, okay? The fair value gap might be what that particular pair you're trading respects more. So sometimes with the relationship you develop with the pair, you get to understand, does the market react off the fair value gap or off the order block, okay? So I, for one, I always like for the markets to pull back to my order block before I take the action. But some pairs, like for instance, if you're trading gold and the likes of that, or maybe some USD pairs, it always reacts off the fair value gap. So you need to have that in mind. So without wasting any time, let's try to see what's taking place right here. All right. So this is a chart. This is a chart we have here, for instance. Okay. This is a GBP, GPY, and if I'm to take us back for us to see what has been happening, you need to always learn to do what the first thing we need to learn to do is what, identify what a trend. Okay, and the first thing we can see, if I'm to make us understand based on what we have been explaining, let's just try to draw it. Here we had a break of structure to the downside, right? Both like that. And here we had another one to the downside here. This was the last break of structure here to the downside, right? Now we can see here that when we have a break of structure, well, we always like to wait for the market to come to our origin. But it so happened, since we had this break, it didn't come. It's fine. You let it go. We had a break of structure here, Whenever I had this break of structure, always wait for the market to come to an origin. This one mitigated so much. We had a change of character here because this is the origin that causes break of structure, and it was mitigated. So here was where the change of character took place, right? We need to understand that. And as I said earlier on, the change of character makes us understand that we're about shifting from the downtrend to the uptrend. And when I say a change of character, this structure is broken, I should wait for it around this zone per se. This is the zone I should be waiting for it. Right. So this is the last candle before the impulsive move. And if we look at it closely, we have what liquidity available. So as I said, with some pairs, the market likes to react off what? It likes to react off the fair value gap. So if we take a closer look at it, this was an impulsive move. The fair value gap was present there, and I'm to note it as such. And yeah, was liquidity available? Definitely. This is a trend line liquidity, as I made mention. If you look at it very well, many people were trying to buy all the way to even this zone. Okay, and that's one thing that I need to always be aware of. And likes of that, liquidity was available, but it so happened that the market didn't get to our order block. So you let it, but the market reacted off it surely. Now we had a break of structure from here, which happened from here. I think it definitely happened here as such. And whenever I have a break of structure, you're waiting for the market to do what? To get to your origin. So if we were to wait for it around here, this is where you definitely want to wait for the market. That last candle before the impulsive move, and you literally wait. You see FVG, right? The fair value gap is literally available there. Okay, no matter how minute it was, it is, but it was available. But it so happened the market didn't target that layer. So we kept on having little break of structures, and I think there's one here that's visible. We had a break of structure here to the upside, and that's why you need to stick to your strategy and what you know that you're waiting for. You need to always wait for the market to get to you and not the other way around. Okay, so we had a break of structure here. So before the market actually dished out this movement, we have to actually ensure that we do our setup. If I was to say this is the last candle before the impulsive move, and if I was to find the fair value gap available, this is the fair value gap. There is a very huge one there, the FVG. Was liquidity available? I need to always ask myself those kind of questions. Definitely, the market form what? A trend line liquidity. When I talk about liquidity, I'm simply trying to say so many traders were buying at this point, but the market literally didn't do it, go their way. So market cleared all of them down, came to the order block, and then we pushed back to the upside. And as I said earlier, when you have a break of structure, the market came from here to this zone. So if I'm to enter the position, definitely I'm entering from here, right, with my stop loss being where? At the bottom here, and my TP being where? Referencing that high, okay? And that's how you get to make it, and likes of that. So if we were to go consistently by that, we can literally find that we have another break of structure here, like that. We have another break of structure here, and we can find that now why are you going to place your order block. Okay, it's like I'm going to do another video explaining what to use as your order block and likes of that. So if I'm to shift this for us to see, so we had this break of structure here to the upside, right? And if we were to go by that last candle before impulsive move, I can see a candle here. Now there are two things I want to explain to us. One of the issues you're going to face is which order block should I really go for? Okay, where along the origin? Because here that we can always choose. But one thing I always tell you is whenever there's an impulsive move like this, okay, try to go for this one if it's around the center, or don't go for origins that are not reasonable, okay, that are far from the area. When there's an impulsive move close to the break of structure area that like this, go to that one. All right, sometimes you equally need to observe. You need to just observe with your eyes, and you see that as the market is coming down like this, if the market is coming down and does not form enough liquidity, like people have not been trying to buy and the market has not been struggling to go up, definitely you become liquidity. That's what you need to understand. You just understand that means the market is going to wipe you out before going your direction. So you need to always ensure that liquidity is available. Like if you look at this chart, there are several other blocks we can see. You can see that this is the last candle here before
an impulsive move like this. Okay, and if we were to look at it closely again, we can see here that here there's a big move around this zone. I can see that's where the market is trying to react from, because sellers were trying to get along the market here, and we had that candle there, and the market is clearly reacting from that. All right, so now there's this origin and there's this origin. So sometimes as a beginner you might be confused, which origin do I go for? So sometimes this relationship, you develop it after you've been trading the pair for some time, and it makes you understand, okay, definitely I can go for this pair, can go for this other block rather than this other block, because I've seen it time and time and again. Like if it's a GPY pair, I can literally make you understand that, okay, the GPY pair likes, more GPY pairs like to just not just go to your origin, like to go so close to it. So you might come here as well as my react from here. Okay, but if you ask me what I'm anticipating, or was there liquidity and likes of that, we can see clearly here, right from this zone, people have been trying to buy, but the market cleared all of them out. That's good liquidity that the market formed and likes of that. So this is just one thing you need to note. Okay, now the ability for you to this is the one thing you have to just keep using. Like for instance, that's why it's all risks. Okay, it's not like it's 100% certain. You see that, okay, the setup is made, you execute. When it comes to your other block, you can look for some candlestick confluence like a bullish engulfing, and then you see that you enter on the next candle, or maybe you can wait for a little change of character around here based on what I explained to be able to enter from here. It's up to you, and the same rule applies if I'm to engage from here. Let's say you took your entry position, you're literally going to be targeting your TP zone around there, and your stop loss is going to be just below there. So that's one thing you need to be careful of, right? It's not 100% certain, but actually it increases your chances. So sometimes you need to backtest. Okay, there are other pairs, when you backtest, the other block will never be, you will never see the market coming to your other block. You always come and tap on the fair value gap, and then it disappears. Sometimes that's what you're going to be seeing. But when you understand a pair that has been touching the other block severally, then you can always go to it, because there are two confluences using this strategy to get in. Either you're using your fair value gap, or you're using the other block to get into your position. So if that's what you're using, then that's great. Okay, so this GBP GPY, and as you can see, this is already a setup. Already, probably if you're trading, you already have insights on GBP GPY for the upcoming week and the likes of that. So if you go to USD GPY, you can clearly see, like, it's so simple. If we were to move from the bottom here, we had this was the last break to the downside. We're in a downtrend from here. We had a break of structure to the downside. Now, where is the origin that caused this break of structure? I can see clearly that this is where that origin is, right? Now, since that origin was mitigated because the market did not respect it, I can call it a change of what? Character. Now, when we have a change of character, I'm always waiting for the market to have a pullback to the last candle. You can see this last candle there, right? Or to the origin that caused that stuff, right? So if I'm to put another block there, you would have been waiting for the market to enter around here. So even though it didn't form liquidity, you wouldn't have entered. But here you're just reading the structures. The market is making you understand what it was literally doing. Now, if you're to follow what the market is doing, of course, we had some little break of structures here. You can see, even though this is a minute break of structure, you need to always consider, if you were to place your order block around here, because we had a break of structure, you saw an impulsive move, fair value gap available. If you were to place your order block around here, where is liquidity? Who is the market going to wipe out? When nobody is there to be wiped out, you're the one that's going to be wiped out. So this zone was the one that's quite, if you look at it clearly and closely, there's another break of structure here, like that, to the upside. And if you look at it clearly, the market is respecting that break of structure, the origin that caused that. This is where the market is reacting off from. This last candle here before the impulsive move. And so this is what you need to know. The fact you see a break of structure is not every origin you wait for. You need to always just wait and see, okay, this origin, is there enough liquidity being formed? If there's not enough liquidity, you become liquidity. So wait for it on the previous one, period, right? And you can see here, we equally had the break of structure to the upside. That was good. And you can look from here, if you look for that origin, this GPY, this is USD GPY. Normally, your order block will want to be here. But I know very well that The origin of this stock started around here. Since I've traded this pair for a while, I know very well why waiting for it. I know it does not just respect my order block. It goes down so close. Okay, so this is why I'll be waiting for this market, right? And when it came back here, this is a relationship you develop with the pairs you're trading. If it's gold, gold has a different nature. Gold always just taps on the fair value gap and it actually moves. It does not always target the order block most of the times, right? And if you have that in mind, let's say we had a break of structure to the upside, market came to the origin, and that's it. Boom, you have your sweet ride. So time and time again, you're going to see that the strategy works that way and likes of that. Something you have to have in mind. So now this is just when you're reading the structures as such. Okay. Now, after you've understood that, the next thing you have to always do is we had a break of structure here. You can see there's a break of structure. You need to start waiting. Since it's the GPY pair, as I said, I know if I was to place my order block literally for this, someone will start thinking of this, but I have enough experience with this pair to understand it's going to react off this layer here. It's literally a support zone. That's how I target it, right? But now, one thing you need to understand is when you're trading, you don't just come to a time frame as such and then you just start seeing you're going up. Okay, you need to always learn to go from the daily. Okay, like for instance, if I'm to go on the daily time frame, I go on the daily time frame to just see what the market is trying to tell me, for instance, right? So this video is going to be a little bit long. Let's just see, like when I come to the daily time frame, what I'm going to be expecting to see is what's the market forming. I don't want to go far to the past. I just want to see at what level are we really at. Okay, what structures are the markets forming? Or maybe if I go to GBP GPY, and then we'll see, like for instance here, just to help you have a view. From here we had a break. You don't want to go too far on the daily. This is a high time frame, except you're a swing trader. We had a break of structure here to the downside, okay, and we equally had a break of structure here to the downside, okay. We had a break of structure here to the downside, right? And we equally have had a break of structure here to the downside. Right, this drawing is because this is what we're doing on the smaller time frame. So just bear with me as it's still there. And whenever I have a break of structure to the downside, market always tries to push back to some origin level. We had a break of structure, market always tries to push back. So on the higher time frame, I use this just to be able to see the direction of the market, right? So this, when I had a break of structure here, it just helped me understand that okay, at least there's going to be an upward move at least to some origin here. Okay, this is the last candle before you can see that the market clearly is reacting off that and we're now bearish as such. Okay, so now that's one thing to note. So if I found this break of structure here, I understood from here that we're now tending to move upwards. Now we are this zone, market has already come up to this zone, like to the origin that caused this. So I can now start thinking like, okay, from here we might likely be going down because it's like on the higher time frame, we're already at the higher time frame order block. This is the daily, that last candle. We're already around there and it makes me understand that we might start going down. So it gives me direction for me to start applying the strategy on that direction on the smaller time frame. So now if I should go down to the 4-hour time frame, of course, when you're on the 4-hour time frame, you can keep marking your structures, right? This was the last break to the downside, as you saw, how they change your character, and you keep doing the same thing, break your structure, wait for your origin, break, we had that. And now once it has come to our order block here, once the market is at our order block, you can see it has come into it nicely. I cannot just be expecting that, okay, because I had a break of structure, I cannot just be expecting here that we are just going to keep going up, because I know it's reacting of this higher time frame structure, higher time frame break of structure now to keep going down. So I should keep anticipating in my head that okay, by the time I observe a change of character around the zone, then we can start going downwards. So these are the key things you need to have in your head. So I should use the strategy where you can understand the trend. Okay, the trend is your friend. So whenever you understand the higher time frame direction, then it helps you. Okay, and you can go as well to guide to the 15-minute trading internal structures. In the upcoming videos where I'm going to be doing trading sessions with the pairs that are available for tradings, I'm going to be letting you guys see and understand how you can get to buy or sell even if the trend is against you and all of that, right? But it's the same strategy and the same things that do apply, right? So in the subsequent videos, probably on weekends, we'll come or do analysis on the various pairs which you can be anticipating to get involved with them in the upcoming week. All right. So with that being said, don't forget to like, share, and subscribe, and hope to see you in the next video.